The channel, and today we're going to go over some crazy news. So FFIE, GME, and AMC have all been moving absolutely crazy today, and there's a lot to cover. So if you're new to the channel, subscribe, like this video, comment any questions you have. But without any further ado, let's get straight into it. So as you guys might have seen, quite literally earlier today, now it's becoming tomorrow, but RoaringKitty had posted a $210 GME position, and he also posted an Uno reverse card on Twitter. Now, he likes to put these kind of cryptic messages everywhere on social media where he doesn't really get to the point. But this is the first time that we've seen an actual, substantiable claim or, something that he can put out that we can see that actually relates to the stocks. And this is his position in GameStop. Now, there's a few things that are going on with this that I'm going to get into a little bit later in the video, but this is a very important thing to keep in mind because the second that he had done this, GameStop had gone up around 100% pre-market to around $40, and this was around 1 a.m. Pacific Standard Time or 4 a.m. Eastern Standard Time, which is essentially, pre-market hours. But however, when it came to market, we actually saw a decline in the price, which is actually interesting because you would think that all of these retail investors would have boosted it up a lot more. However, we're seeing kind of a different effect, but that is due partly and mostly actually in the reason that it's happening is because of the shorts, and I'm going to get into that a little bit later. But it's also nice to see that this is this positive sentiment because what I'm going to say later is going to be a lot more of a catalyst that's going to get us into potentially another short squeeze territory for all three of these stocks and a few other two ones that run with it as well. However, I want to talk about this. So basically, E-Trade, which is the brokerage company where you can go on their brokerage and you can create an account and you can start trading stocks. It's basically the same thing as like Charles Schwab. But most of you guys already probably know what that is, but they considered kicking off, they call him a meme stock leader, Keith Gill, off of the platform. And as you can see, Morgan Stanley's trading platform discusses concerns about potential manipulation of GameStop. Well, let's talk about the real thing that's going on here, right? The real reason that they want to kick him off, most likely, is they're selling order flow to companies like Citadel and all these other companies where basically they're able to see all of the orders before, as they're happening, and they get to see all of, this information, which allows them to make better decisions because they can see the order flow as it's coming in. Whereas we see things, as a retail investor, for example, even politicians, they report to us a few weeks after they've made the trade. So regardless of, us being able to see their trades, it happens much later. We see it a few weeks later, and that's not the greatest thing. However, these people have, all the information. And that is how brokerages like Robinhood make money, right? They sell order flow. And they got a lot of flack for this before, and I believe it caused their stock to go down. Don't quote me on that. This is not financial advice. Do your own research. It's just entertainment purposes only. But yeah, this has happened before. So when we're seeing them say this, it's almost contradictory in a way where they're trying to do a little bit of pointing the finger, like, oh, look, it's his fault that, all this stuff and manipulations going on and whatever. But he's never actually asked people to purchase the stock. He always posts these random clips, like, I like the stock, whatever, but he's never really been the one that has been championing the stock in a way that's directly telling us to purchase it. More just him giving insight to what he's doing, right? And he was right, and he made a lot of money. And, he was under scrutiny from the U.S. government or some securities. I don't want to talk out of my ass because I don't know. But, he's under scrutiny at a certain point, and he had to give, basically testify on a video. And it's just essentially crazy that they put this here. But besides that, I think something really funny that also happened that you want to know before we get into these stocks is how Public, which is a trading company, just like E-Trade, they literally made a tweet and they said, you're always welcome to trade over at Public. We'll cover the ACAT fees. I'm not sure what that is, but one of you guys in the comments could tell me, but I'm guessing it's some sort of trading fee. And they said that E-Trade is considering removing the trader known as RoaringKitty from its platform, and we just went over that, yada, yada, yada. But it's just funny that there's other brokerages out there that are willing to take him on, that are willing to take the side of the people or the apes or, the Wallstreetbets community and kind of just bring them on. It's kind of like an invitation for more business, like when they're saying this to RoaringKitty, Keith Gill, it's like an invitation to all the other Wallstreetbets members to say, hey, come trade with Public. We're not going to do the same thing. If you guys make crazy gains on all of these short squeeze stocks, we're not going to be like, oh, hey, you're manipulating the stock, blah, 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 yada, yada, yada. So it's good marketing from their part, but it also shows that there's a brokerage that's not going to be potentially, I don't know this, but maybe they aren't selling order flow. But if it's free, then, it begs the question of, are they just doing this as a publicity stunt to get more members? And then eventually they change their narrative. But regardless of that, it's quite funny to see that. Now let's besides all the little news and stuff that's going on, let's actually get into GME, AMC, FFIE, and the other stocks that are correlated with this meme stock sector. I want to kind of get into this. There are two more that I'm going to kind of talk about a little bit more, but let's get into this. So GME was up pre-market, literally before the market opened today, 100%. Then it came down. Now it's up to 20% for the day as of June 3rd. As we can see, it opened really high and it kind of came down. And I believe that's mostly because of the shorts having to cover their shares. I think they're all covering it at a different time. And I'm going to get into the short volume a little bit later, but we see a positive market sentiment here, right? We see this Uno reverse card posted on Twitter. We see Keith Gill posting his, ginormous position in GME with his call for June, expiring in June, and we see his shares. And I believe this is a really good catalyst for there to be a short squeeze. Don't quote me on that, of course, it's not financial advice, but I believe that this is kind of what happened last time. He was giving daily updates for a long time of his position before we actually got in there, and it became this trending thing where they even made a film about it, right, years after. But I believe that this is the start, and we're going to see potentially more updates, because remember, he went inactive for 3 years, and the second that he went active, not this time, but a little while ago, we saw like the stock jump up again and then come back down. So it's definitely a catalyst for sure. And the gang of apes, whatever they call themselves, Wallstreetbets, whatever, what's going on, it causes it to go up more and more. And people in this community, they like to hold their shares and not sell. They like to call it diamond hands, right? And I think it's super cool. But that paired with turning stock lending off and forcing the shorts to basically have to buy back shares at a higher price is what causes the squeeze. Because when there's a lot of volume coming in and the price is being kept around what it is, it causes a squeeze, right? Because they're forced to buy back all of these shares. And what these shorts try to do is try to manipulate the price to go down. So when they're forced to buy back these shares, they don't have to pay as much for the shares. So they take a lot less of a loss, right? Because, for example, they just want to get their, the lowest amount of loss that they can. However, when we look at GME, we can see that 48% of the volume is actually short volume. And this is all public information. You can go to Fintel yourself and you can look it up, and it's updated like every few days to like every day. And we can see that of the aggregate volume on the trading day of June 3rd, there was 65,963 whatever shares traded, right? And the aggregate short volume ratio is about 48.67%. So needless to say, right, like this can squeeze again because the shorts are going to be forced their hand to cover if more people buy and turn stock lending off on their brokerages, and then whatever, they have to essentially buy back these shares at a higher price. Now, are these companies dumb? I don't know. Have they learned their lesson from last time? I don't know. Is this an opportunity? Potentially. But let's get into AMC as well, because it's paired with GME as well. So this stock was actually up pre-market prior to today's trading day, 35%, and then it came down, and now it's up 11% for the day as of June 3rd. Now, when we look at this stock, it's also very important. I think actually AMC is shorted more than GME. Does that mean that AMC is going to potentially have a higher chance of squeezing? I don't know, again, but it's potentially the case. You can see it's up 11% on screen for you guys to see, and it was up 35% pre-market. Now, are the shorts bringing this down? Most likely. I doubt that these retail investors are selling, besides the people that may have bought pre-market and have short hands, and they're basically trying to get out of it. But let's look at this short volume, right? As I just said, it's 62.77% short volume, huge short volume compared to the other two stocks that I'm comparing in this video. Much more short volume than other volume, right? So the normal volume. So when we're seeing 62.77% short volume, if a lot of these Wallstreetbets people and us retail investors start purchasing the stock, then these shorts are forced to cover their hands, right? So they're forced to buy back the shares because their short is basically they're predicting that the stock's not going to go below, yada. And if that's the case, then these stocks can go up, right? And same thing with Faraday Futures. Although I am kind of speculating on FFIE a little bit. It is a bit of a speculation, but this stock was up pre-market and came down. Now it's up 7% for the day as of June 3rd. Probably with this one, the shorts are holding the price down to get people to sell, and 62% of this, actually not 62%, 55% of this is short volume, as we can see here, 55.79%. That's of this trading day today. 55% is short volume, and we can see that the total volume was about 100 million shares. Now, this is not as high as it was at one point. As we can see over here, it was at 900 million shares at one point, total volume. And of that 900 million shares, there was 521 million shares that were short, aggregate short volume. So it was about 57% short volume. We're not there. The percentages are about the same, but the amount of total volume that's being traded is less. Is this going to change? Again, I don't know. You're more than welcome to do your own research. This is just my own research and findings, but this is kind of the picture that we'd like to see, right? Now, this is potentially a place to make a lot of money. Now, again, do your own research. This is all totally speculation, and we could all lose money, right? But let's take a look at some of these Reddit posts. So first of all, it says hedge funds may become very desperate soon because of the $517 billion in unrealized losses hitting the U.S. banking system. If you want to read that post, I will put it in the description. But basically, they're working with banks to get loans, and they have to pay off their shorts because they're in trouble. Now, this guy is saying they're really losing a lot of money. That could explain the market glitching, Robinhood accounts having issues, and E-Trade considering removing RoaringKitty. This is a very real possibility. I mean, again, he's speculating the same way that we do. At the end of the day, everything is speculation and research and things like this, but we've already seen the hedge funds struggle, right? And this could be another time for, them to struggle again because of all these people that are holding their shares and turning stock lending off, right? When you're not lending your shares, there's less shares in circulation. So it's very important if you're trying to be part of a short squeeze to turn your stock lending off and to hold your shares and not have, what they call paper hands, have diamond hands is very, very important. But, I think it's funny. This guy said in a movie aspect, this went from dumb money to Big Short real quick. That could potentially be the case. This could be another GME, but again, we won't know until, the time comes. But another side of the news I would like to cover as well is Andrew Left, the founder of Citron Research, has placed another bet against GameStop. So he's shorting it. And basically in May, Left also announced a short position in the company's shares. He said, I have covered my short from May and then reshorted today. So he believes that it's going to go down even more. Now, will the community see this and want to purchase more? I can't tell you. But what I can tell you as a trader and a person that invests in long-term, holds, this is a potential to make a lot of money in a short period of time, and I think you should do your own research and look into it. And hopefully this video has given you some context into what's going on if you haven't been paying attention already. But here are two other stocks that went up during the last squeeze that I want you to keep your eye on. One of them is KOSS Corp. I believe they make headphones, which is they're like a random company, but they also had a high short interest. And around January of 2021, when all the other stocks went up as well, this one went from around, I believe, $3 all the way up to $64 at the peak on January 29th trading day. And Blackberry went up from around $5 all the way up to $15. So I know the Blackberry one's not as crazy, but it still went up a decent amount, and those are two to keep your eyes on. But hopefully this long video has been somewhat useful and entertaining to you guys. If you're still around, make sure to subscribe if you aren't already, hit the bell notification, and comment any questions. I reply to all questions within an hour or two. So I love seeing comments and questions from you guys, and I love discussing more trade ideas and other things that you guys might bring up. So with that all said, have a good trading week. I'll see you guys in the next video.